Hi folks. Welcome to Stock Market The Week Ahead video. We have a lot to talk about in this video. We have CPI data, bank earnings. And for the next week PPI and other important economic data coming. And we also look at the coming earnings from next week. Let's begin. Welcome to Take It Easy Trading. Your channel to get stock market updates, trading levels for popular ETFs, stocks and Bitcoin. You will also find tutorials on how to trade, develop your own trading strategies and learn continuously. Please like, share, comment, and if you find value in my videos, please subscribe to get notified of new content. Topics for this video. Let's look at the week's performance. The stock market closed at the highs for the week. We had a huge rally this week after the CPI data released. Dow Jones is up 2% for the week and up 3.5% for the year. The S&P 500 up 2.7% for the week and up 4.2% for the year. Whereas Nasdaq is up almost 5% for the week and up 6% for the year. The international index is up 3.3% for the week and up 4.4% for the year. Yields are down slightly 0.1% for the week and down 0.4% for the year. Oil is up big 8.4% for the week and still down 0.3% in the year. And lastly, bonds are up 0.8% for the week and up 3.4% for the year. As I predicted in my 2023 Outlook video, this year bonds will do good. It was a wild rally on Friday again. So let's take a look at the heat map. Everything is pretty much green. Apple, Amazon is up 14% for the week. Tesla also went up 8%, Microsoft by 6%. The financials have also done well. The defensive sectors such as consumer defensive and healthcare stocks are down for the week. Let's look at the S&P sector's performance for the week. The growth stocks are up big for the week. Consumer cyclicals are leading with almost up 6%. Followed by tech sector also up 5.5%. Healthcare and defensive sector at the bottom as we can see rotation from these sectors into growth sectors. Let's look at the sectors for the first 2 weeks of 2023. Leading again is consumer cyclicals up by 10% for the year. Real estate also up by 7%. Financials up by 6.35%. Energy is up by 2.35%. At the bottom are defensive sectors. Fed rates remain at 4.5%. Unemployment at 3.5%. Let's look at yields. Yields are not buying this rally. They are up slightly for 1-year Treasury. 10-year Treasury yields are down slightly. Whereas 30-year Treasury yields are actually up 0.1%. The bond yields are telling a different story. Mortgage rates. The 30-year fixed is at 6.35%, down big from 6.7% from last week. The 15-year fixed is also down to 5.61%. Let's look at the Fed Watch tool. Thursday's consumer price index and other recent data have bolstered hopes that a sustained downward trend in inflation could give the Federal Reserve room to dial back on its interest rate hikes. Money market participants now see a 93.6% chance the Fed will hike the benchmark rate by 25 basis points in February. And chances for 50 basis points fell from 25% last week to 6% this week. That explains the rally in the stock market. Bank earnings and some headlines. With shares of JP Morgan Chase and other banks rising following their quarterly results, which kicked off the earnings season. JPM on Friday posted fourth quarter profit and revenue that topped expectations as interest income at the banks surged 48% on higher rates and loan growth. JP Morgan said modest deterioration in the firm's macroeconomic outlook, now reflecting a mild recession in the central case. The recession, in which U.S. unemployment could reach 4.9%, is expected by JP Morgan economists to hit in the fourth quarter of this year. The current unemployment is at 3.5%. To reach a 4.9% level, millions of jobs have to be lost. There has to be mass layoffs across the board from many companies. Tesla cuts prices in the US and Europe to stoke sales after lackluster year-end deliveries. Tesla cut prices on the Model 3 and the Model Y from 1% to around 17%, depending on the configuration. The price of a new Tesla Model 3 in the US has dropped between 6% and 14%, depending on configuration, and the cost of the Model Y dropped about 19%, also depending on configuration. Treasury Secretary Janet Yellen notified Congress that the U.S. will reach its statutory debt limit next Thursday. Failure to meet the government's obligations would cause irreparable harm to the U.S. economy, the livelihoods of all Americans, and global financial stability, Yellen warned. Now let's look at the next week's market momentum and economic calendar and the earnings. Market momentum. This is from the Friday's close. It was a pretty good breadth. Looking at the moving averages, they all improved extremely well compared to last week. Last week we had 75%, now 83% are above 5-day moving average. The biggest improvement is in the 20-day moving average last week. There were 66% of the stocks above 20-day moving average. This week it is improved to 87%. Looking at 200-day moving average, great improvements from 42% last week to over 53% this week. So the momentum is really positive. It can support a short-term continued rally. Now let's look at the new highs and new lows. So similar thing here. In the new highs and the lows, a little bit more positive breadth across the board in 5-day, 3 months and 52-week new highs and lows now. Economic calendar for next week. Market is closed on Monday. Nothing much on Tuesday. On Wednesday, we get core PPI reading. Expectations are to drop to 0.1% month-over-month. We also get core retail sales, to the unchanged at -0.2%. On Thursday, we get Philly Fed manufacturing data. On Friday, we have couple of Fed speakers. Now, let's look at the next week's earnings. This is the January month earnings calendar. On Tuesday, we have Morgan Stanley and Goldman Sachs on the deck, as well as United Airlines. Goldman Sachs is expected to post a negative 17% growth, whereas Morgan Stanley is expected to post some absurd number. I noticed some of these smaller banks are having a phenomenal growth rates of over 20%. On Wednesday, we have Charles Schwab, Prologis, Discover, JB Hunt and Alcoa on the deck. On Thursday, we have Procter & Gamble, Netflix, Atlassian, American Airline and Comerica on the deck. Procter & Gamble to post negative 1.8% growth. Again, look at these growth rates for small banks. I have to look at their charts and see where they are in terms of technicals and if it makes sense to buy them. On Friday, we have Schlumberger, State Street, and Ericsson on the deck. Schlumberger to post 25% growth. And this small bank INDB to post 26% growth. Seriously, have to look at these regional banks. I think there's ETF for them too. Netflix on Thursday is expected to post not so impressive top-line revenue, and for some reason EPS is down to 63 cents from 2.14 from last quarter. I may do another video just for Netflix earnings preview if time permits. That's all in this video. I hope you enjoyed watching this video and learn what to look forward in the upcoming week. Please drop a like, or share, and subscribe. See you in the next video.